The big point is, the really big takeaway for me personally is when the Treasury Secretary states that Bitcoin is a currency. Like, Mnuchin won't even admit that gold is a currency, but he's saying Bitcoin is a currency. Okay, that de facto means Bitcoin's going up. Okay, and if you don't get that, you know what? You really need to go read some textbooks, because fundamentally he's saying it's a currency. Okay, name a currency in the Western world that has name a currency anywhere in the world that has a market cap of only 200 billion. There isn't one. Okay, so that means that means that Bitcoin, believe it or not, as long as Bitcoin's going to be with us, that means it's dramatically undervalued. Okay, because currencies have market caps bigger than 200 billion. Okay, I think the Canadian dollar probably has a market cap of maybe 2 to 3 trillion. Okay, Canadian. Okay, so, and Bitcoin's more widely held than Canadian dollars. So do the math. Okay, think it out. Bitcoin's going up, not because I like Bitcoin. It's going up because your Treasury Secretary has said it's a currency. End of story. It's going up. Okay? Gold wants to go up, but it's being prevented. Okay? And the shortage or the lack of physical metal will force the price of gold up to an extent. But if you think they're going to let the price of gold run as free as a cryptocurrency, they won't.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
What good does gold do me anyway? I can't use it for anything.
Well, I think I found a form you might appreciate.
Wow. That's beautiful. Wow, I can wear that just about anywhere.
And you can take it with you through airport security and across borders. It's small and compact and lightweight, and you can even hand it down through generations. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP. Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. We're very glad to have this returning guest. He's wildly popular with our viewers. Rob Kirby is returning to Reluctant Preppers to answer your viewer questions and to weigh in on some of the latest developments regarding gold, silver, the stock markets, and cryptocurrencies. Today is Thursday, July 18th, 2019.
My latest thing has been that the powers that be are going to shovel crypto alternatives down our throat, and I would say that that's really starting to take form. Because I did notice that Mnuchin 2 days ago, he literally referred to Bitcoin as a currency. And when the Treasury now, like, I know that Trump's had some disparaging remarks about cryptocurrencies, but when your Treasury Secretary says that Bitcoin is a currency, that tells me it's going up. Because Bitcoin right now has a market capitalization of about 200 billion. And, if something's going to be a currency, if it's a real currency, which Mnuchin just admitted it was, like, the market cap, in my view, because it's held around the world, I can see a market capitalization coming in the next 2 to 3, 4 years, 2 trillion. Okay, that's 10 times the value of what it is now, and right now it's almost 11,000. I can see Bitcoin being worth $110,000 in 2 to 3 years. Okay, Now, will the price of gold go up? Very likely it will. But you know what? I'll bet you it won't be more than 3. So I can see gold doubling, and I can see Bitcoin going up by a factor of 10. And I don't dislike metal. I like metal, and I think you need to own metal. And in the end, metal will actually be worth, on a relative basis, in the very end, physical metal will be worth more than Bitcoin. Because Bitcoin's digital, and I'm very wary of digital shit because they can turn the system off. You know, there is an internet kill switch. I mean, you know, anybody who has a Facebook account or a Twitter account knows that it was shut off at one point last week or 2 weeks ago, whenever the heck it was. It was down for an afternoon. Okay? And it was the day Trump was, I think it was last week, it was the day Trump was having his cyber meeting at the White House. And isn't it amazing? Just when it was about to begin, Twitter went down for hours. Like, if you don't see the messaging in that, like, you know, you're living on the wrong planet. There's messaging that's going on. Okay?
I would be remiss not to interject at this point, because they'll definitely say in the comments that Twitter is a centralized service and Bitcoin is decentralized, so therefore it's not the same thing.
Okay, well, you know, in any case, you know, they're both digital, and one of them was shut down. Okay, and just as the president was about to convene his meeting on cyber issues, and if you haven't heard what's come out like even today, with the this is a PhD guy who does research and builds models on crypto. He's saying that Google delivered a bare rock bottom minimum of 2.4 million extra votes for Hillary in 2016. And he said that's rock bottom. And the range is 2.4 or 2.6 million up to 11 million votes Google manufactured for Hillary in 2016. So Google has the ability to name the next president or the next winner in an election. Okay?
Was his analysis based on like indirect effects of influencing opinion by how you influence polls and things?
It was all over Alex Jones today.
Okay.
And they were playing this guy. This guy is an accredited and renowned guy in this area.
Right.
He was a Hillary supporter in 2016. But he has built models, and based on his own sampling and his own proprietary work, he knows that the system's rigged. He's come forward because he said the implications are so dire and so ominous for our future that he even though he was a Hillary supporter, he can't live with himself if he doesn't speak up about this. Because and he said that basically saying Google is the biggest threat to humanity that there's ever been. So, and this is a guy who understands how it all works. And he said this is why, and basically they were saying, this is why Google is acting so arrogant. Like nothing can touch them. Because they have the ability to, and he said, and Facebook to a lesser extent. But this is what social media has become. You want to talk about rigging and rigged markets and rigged outcomes. This is what social media is all about now. Okay, and the power these guys have is absolutely ultimate, and he was just saying Trump needs to come up the curve on this like immediately, or humanity is basically screwed. So that's the world we live in today.
Could you expand on that? Your comments about government influence over cryptocurrencies and whether or not they're going to be forced on people or prohibited to people, because we had within the last week we've had a congressional and other people coming out saying no, it's cryptocurrencies are only used for nefarious purposes and that sort of thing. So it sounds like we're on the verge of them being perhaps illegalized or whatever.
No, I mean, of course they have disparaging, on one hand they admit that they're here to stay, and then on the other hand they say that there needs to be some sort of a regulatory framework put in place to guarantee that, they're not used for nefarious purposes. But all I can tell you is that ability and technology and application to crypto is coming. It's coming, and it will be here. It will be here before you know it. Okay, because it's already been developed, and they have a way to make crypto regulatory compliant, and that is coming, and it's literally on the eve of it being launched. So I know that's coming. All right, and I know that they have crypto applications that comply with AML and KYC criteria more so than fiat money.
It's anti-money laundering?
And know your client, yeah.
Okay, all right.
So these things are here now, except they haven't launched. But they've been devised and they've been developed and they're ready to go. I love metal, and I like metal still. So, but all I know is crypto is here to stay. It's not going away. And anybody who thinks that crypto is going to be smaller in 3 years rather than larger is a fool. And my guess would be, frankly, after Mnuchin stated that Bitcoin is a currency, that means the value of Bitcoin is going up dramatically. The big point is, the really big takeaway for me personally is when the Treasury Secretary states that Bitcoin is a currency. Like, Mnuchin won't even admit that gold is a currency, but he's saying Bitcoin is a currency. Okay, that de facto means Bitcoin's going up. Okay, and if you don't get that, you know what? You really need to go read some textbooks, because fundamentally he's saying it's a currency. Okay. Name a currency in the Western world that has name a currency anywhere in the world that has a market cap of only 200 billion. There isn't one. Okay, so that means that means that Bitcoin, believe it or not, as long as Bitcoin's going to be with us, that means it's dramatically undervalued. Okay, because currencies have market caps bigger than 200 billion. Okay, I think the Canadian dollar probably has a market cap of maybe 2 to 3 trillion. Okay, Canadian. Okay, so, and Bitcoin's more widely held than Canadian dollars. So do the math. Okay, think it out. Bitcoin's going up, not because I like Bitcoin. It's going up because your Treasury Secretary has said it's a currency. End of story. It's going up. Okay? Gold wants to go up, but it's being prevented. Okay? And the shortage or the lack of physical metal will force the price of gold up to an extent. But if you think they're going to let the price of gold run as free as a cryptocurrency, they won't. Okay? Because, like, people for some reason, like when Bitcoin goes up, people sort of equate it to like Apple stock going up, or Netflix going up,
sure,
or Google going up, and because it's part of the financial universe, or the high tech universe, right, people will accept it. Like if Bitcoin only has a market cap the size of Apple Computer, Bitcoin will be at $50,000. Only if it has a market cap the size of Apple Computer at $1 trillion. That would be 5 times more than it is today. 50,000 a coin. Okay? Now, all I'm saying, if Bitcoin achieves a market cap the same as Apple Computer, that's still whistling Dixie compared to it being a currency. And Mnuchin said it's a currency. So where's the price of Bitcoin going? I don't know, but I know the direction is up, and it's up significantly. Gold would love to be taking the ride with it, but gold is still under control. Okay? I know we had a nice move up in the price of gold and silver today. But here's the thing. Silver today, I think, was up 2.5%. Gold was up 1.5%. Bitcoin was up 10%. What do you want to have working for you? 2.5% on a great day, or 10% on a, here it is day? But I mean, that's I'm observing the reality around me. And I've had some people make comments, I've read comments in recent interviews I've done where people say I've changed my hat and I don't like metal now. That's not true at all. I think metal is still fundamentally something everybody has to own and needs to own and should own. But I mean, and to be honest with you, to recommend anyone to buy cryptocurrency right now, you'd be a fool if you did, because how can you recommend anything to somebody when we have daily price moves of 10% up or down? That's not investing. That's called gambling. It's reckless to even think about it. Even though I believe, and I absolutely believe in my heart of hearts, I know the price of Bitcoin is going higher. But I wouldn't want to recommend Bitcoin to anyone, because you know what? I could recommend it today, and tomorrow it could be down 15%, and somebody might jump out of a building because they bought it. So, yeah, the price is going higher, but I mean, who needs it? Who needs that? It's not prudent to own it. It's not prudent to invest in that area. The preconditions for entertaining an investment in that area, you need to have an awful lot of information. You need to know an awful lot about the proposed specific investment you're going to put it into. And then the timing has to be right. And very few people possess that kind of knowledge to make an informed decision on that kind of an investment. Plain and simple. I don't possess to know it. Anyway, it's not like investing in metal. It's not, and the funny thing is, the powers that be want us to believe that the riskiest investment on the planet is gold. Okay? And they want us to believe that crypto or a crypto solution is much superior to precious metal. And I'll just tell you, at the end of the day, that won't be the case. But in the interim, it might very well be the case, because that's what they're pushing. Okay? Do notice, Steve Mnuchin did not come out and say gold was a currency. Mm-hmm. He said Bitcoin was a currency. So the system is still absolutely anti-precious metal, and will do everything in their power to see to it that precious metals prices don't get ahead of themselves. Because remember this, if you look at the build in the open interest of the COMEX futures in gold and silver, these things are I think it was just yesterday, we saw the open interest in gold go up by 19,500 contracts in one day. That's one of the biggest moves, if not the biggest move I've ever witnessed in terms of increase in open interest for one day ever on COMEX for gold. And, the silver open interest, I think yesterday climbed 3,500. And that's with the price of silver adding, I think, 2% yesterday, up 25 or 30 cents, I think was the number. Mm-hmm. But I mean, just imagine if the increase in open interest, which is I refer to it as naked selling, if the open interest hadn't climbed by a resounding amount in both gold and silver yesterday, on days when metals rallied, can you imagine if the people who have been short instead of adding to their shorts, we're forced to capitulate under such conditions, and we're indeed buyers instead of sellers. Like, you know, a 25 or 30 cent move up in silver might have been $3 or $4 instead. Mm-hmm. Okay, and you know, and who knows what the move would have been in dollar terms in gold if an extra 20,000 contracts weren't added to the shorts, like, and representing the increase in open interest. So, but I mean, regulators haven't been regulating because there's commodities law on the books that say that you're not allowed to do these things because it's manipulative. But regulators turn their cheek and look the other way when this is occurring. And the reason they do that is because the powers behind the manipulation are not the banks themselves. It's the U.S. Treasury. Okay, it's the Exchange Stabilization Fund acting through its broker, its only broker, which is the trading desk of the New York Federal Reserve. And it's the New York Fed that disseminates the orders of the U.S. Treasury's Exchange Stabilization Fund. So the banks are basically they're enacting U.S. monetary policy, you know, through the COMEX and the big derivatives houses banks are the entities instituting U.S. monetary policy. Okay, and it's five players that do this. Okay, it's the big derivatives houses in the U.S. It's J.P. Morgan, Citibank, Bank of America, Goldman Sachs, and Morgan Stanley. Okay, those are the perpetrators. Those are the people that are getting the orders to buy and or sell in the precious metals arena on the government's behalf. Okay, and formerly another big player in terms of a foreign entity would have been Deutsche Bank. You see, except Deutsche Bank doesn't have the privilege or the luck of being an American financial institution. Deutsche Bank happens to be a German bank, and their regulator is a German regulatory body called BaFin. And BaFin raided Deutsche Bank 5-6 years ago and found out what they were really doing, namely being agents for the U.S. Treasury. And they went absolutely bonkers, and they reined Deutsche Bank in, and to the point of basically almost putting Deutsche Bank out of business because they're not doing very well right now. And that's not hearsay, that's in the news. So what is behind all this is the German regulators are not going to put up with financial impropriety that Deutsche Bank was engaged in. Okay? So now if we want to roll over to the notion that there's $21 trillion in money that was cooked up digitally, and I'm going to say that money is siloed in entities like the Exchange Stabilization Fund. And the Germans are not stupid. They recognize and realize that this extra money has been created. And if anyone thinks that the Germans are going to allow the US dollar, when American leadership won't answer fundamental questions regarding how many dollars there are in existence, and their response to questioning in this regard is to introduce new financial legislation like FASB 56, which excuses the U.S. federal government from accounting.
Right.
And if people really believe the Germans are going to allow this to continue, that they settle all of their international trade in a currency unit where the stewards of that currency unit won't even answer fundamental questions about how many of those units are in existence, you are smoking bad drugs. because they are not going to put up with it, and they're not going to allow it to continue. And what I can say categorically is the US dollar's reign as the world's reserve currency, the days are numbered. Because the rest of the world is not going to tolerate the financial impropriety which is on display in bold neon, thanks to the forensic investigations undertaken by Catherine Fitz, Dr. Mark Skidmore, who are extremely credible people. Exactly.
This is the book that Catherine sent me after we interviewed her here about the real game of missing money and what happens.
Yeah. Well, this is a reality, and this is a reality that the rest of the world is not going to tolerate and put up with. So, the writing's on the wall, and I can't give you a date when, where it all winds up, but that's the direction the boat is now headed in. And people need to start thinking about how they're going to best protect themselves from what is absolutely guaranteed to happen. So as the impropriety of what's been done with the dollar is Deutsche Bank times trillions. And if the Germans wouldn't put up with these shenanigans from Deutsche Bank, be advised that they are not going to put up with the shenanigans that are going on in the U.S. Treasury. Won't happen. So anyway, make your plans accordingly is what I would advise anyone to do.
Well, on that note, we've got a lot of people who have written in questions for you that we'd like to get to, because some of them address things that you've touched on, and maybe some of those we'll already be able to dismiss because you've already answered the questions, but we'll see what we got here. GGSLV58 says, what will break the manipulation of precious metals? Are we close yet?
What's going to break it is physical demand. And I would like to think that we're well on the way to that happening, but it hasn't happened yet. And it's going to take a big push in physical demand and people shunning the derivatives of GLD, SLV, COMEX futures. There will come a point where people won't go there, and they won't spend their money on those instruments, and they will demand physical. And when the physical demand just can't be met, period, because nobody will sell for fiat money or physical metal, it will cause this to break. But we're not there yet. And how soon we get there, I don't know. But we are witnessing dollar rejection around the world in the form of rejection of treasuries. Foreign participation in U.S. government bond auctions has been declining, and countries around the world have been selling their U.S. government bonds. And we have heard of many instances, at least I have in the circles I travel in there being a lack of collateral. And when people talk about there being a lack of collateral in a capital market sense, and in terms of dollars, they're talking about there being a reduction in the amount of U.S. government bonds in the marketplace. And there are some people who mistakenly believe that that means money supply is contracting. I'm here to tell you that the money supply is not contracting, and the lack of collateral is because dark money is being taken out of the Exchange Stabilization Fund, and it's giving, they're exchanging this dark money, this digitally created, fraudulently digitally created money. They're taking it out of the silo. They're giving it to people to cash them out of their bonds that are being rejected. And then the money is going into other things, be it equities, which are at all-time highs, be it real estate, which in my view remains very, very robust and healthy around most of the world. And it's going into cryptocurrencies, which have certainly regained their footing and have been making very significant advances in recent weeks and months. And so when you take dark money out of the silo and you cash people out of the U.S. government securities, those securities then go into the silo in place of the money. So it looks like there's less debt, but there isn't less debt. There's actually the amount of money in existence, if anything, has been growing, but the bonds are disappearing. And when you really think about it, the traditional financiers of U.S. government debt have been liquidating debt. Yet the government seems to spend an extra trillion a year every year, and the budget deficits have not decreased at all and continue to grow. Yet there's no problem seemingly auctioning all this new debt, even though people don't want it. And so what solves that dilemma? It's the missing 21 trillion that's been siloed. And to be honest with you, Dunnigan, I think the number's probably a lot bigger than 21 trillion. I mean, 21 trillion is what they identified, Catherine Fitz and Dr. Skidmore. The real amount, and that was only 2 government agencies, the real amount that might be missing or that might have been fraudulently created might be multiples of 21 trillion. So these people have a war chest, and it's not transparent, but we can, frankly, in my books, we see the evidence of it being put to work literally on a daily basis, because everything keeps going up in price. The stock market goes up, the cryptos go up. I mean, these are not signs of there being less money. Okay, these are signs of there being too much money, because it's going into, at least in my books, wildly overvalued entities to begin with. So that's my take on it.
Roger Stansel asks, "Yo, Rob, no one, and I mean no one, has a clue about silver. Why is that?"
I mean, no one has a clue about silver because it's probably the most manipulated entity on the planet. It's a very small market, and when you look at the open interest numbers on COMEX alone, which currently I think is around 235,000 contracts in open interest, which equates to over, I think it's roughly 1.5 times global output from mines is short on one exchange, COMEX in New York. So, I mean, these people have sold silver that A, doesn't exist, may never be mined, and regulators turn a blind eye. So why don't people get excited about silver? Because in all honesty, empirically, silver's been a very bad ride for about 8 years. We got to $50 in 2011, and then silver was taken down and dismantled through the derivatives markets, through the futures markets, where silver that doesn't exist was sold with reckless abandon to literally rig the price at a much lower level and to depress and destroy investor sentiment in the sector. So that's why people don't know about silver. So, but I mean, it's been a complete criminal takedown. So it's a shame that the stewards of our capital markets are engaged in criminality by officialdom who basically have granted themselves a pass. And they basically said to the world, we are entitled to do this. We make the laws, and we're saying it's okay. But don't you try it at home, of course. If you try doing anything of that sort yourself, you go to jail.
Hey, that started in our basement, where our youngest son, was printing out currency off of the Federal Reserve's website. They have a thing called moneystore.gov or something like that, and you can print out old, either modern or old bills, and then he'd print them out. He'd put the paper back in and get it so the front and the back would line up just right, and then he'd wear out the paper by rubbing it against stuff till it felt nice and soft. He'd come up every week. He was prouder and prouder of what he was doing. And finally, we got scared. He said, "You got to start writing the word copy on these, because these are starting to look too good." He said. Then he did some investigation about it. But Mom and Dad, this is what the government does.
Well said. Actually, it's probably not as bad as what the government is doing.
Right. Hey, we got another question from Valerie R., tying into something you touched on earlier with Deutsche Bank. She says, what does Rob think about the news today on Zero Hedge that investors are pulling $1 billion per day out of Deutsche Bank?
Well, I mean, if I had money in Deutsche Bank, I would take it out too. That's how I would answer that question. Good for them. The only issue you have is when you take your money out of Deutsche Bank, where do you put it? JP Morgan? Jamie Dimon would love you for doing so.
Yeah.
But to be honest with you, at the end of the day, whatever Deutsche Bank has done to be in the predicament it's in, rest assured, JP Morgan has done that times some quantum. So, but you see, the difference between JP Morgan and Deutsche Bank is that JP Morgan reports to American authorities or regulators, and Deutsche Bank has to answer to BaFin. And German regulators, I mean, if JP Morgan had to report to the same regulator as Deutsche Bank, JP Morgan would probably be out of business and wouldn't be a bank anymore. So, think about that.
We have another question from Earl Thornburg, who says, in what ways could President Trump manage the monetary reset so that it would provide the smoothest transition for U.S. citizens?
I think he's attempting to do just that.
How so?
I think President Trump is very aware that $21 trillion is missing. I think he's also very aware that if he were to come out and admit this publicly, it would probably spark a civil war and maybe a world war. And I think President Trump is engaged in damage control, which is trying to make the best out of a very bad situation that he's been put in. I mean, the financial atrocities that have been committed were not done on President Trump's watch. He's inherited this issue. And I think he's trying to manage his way out of it in the most civil way he can. And I guess at the end of the day, Trump has been put in a position of basically being parachuted into the wheelhouse of the Titanic after it has hit the iceberg. Mm-hmm. So instead of inciting panic amongst the passengers, he's basically telling the band to play on. And the band is playing on. Because I guess really what it comes down to, Dunnigan, at the end of the day, nobody benefits from anarchy and chaos. Or, unless you're a globalist, of course, in which case you probably welcome that.
And then you take over with martial law, etc.
Sure.
UN troops in the streets and so on. This is a related question from Gary Worrell. He says, hi, Rob. Unlike Dunnigan, I don't believe that a world financial crisis will manifest itself in any catastrophic way, but I do think the world central banks are orchestrating a gentle reset. Your thoughts?
I believe this is going to get violent at some point. So I wouldn't agree with the all's well and anything to do with a global reset at the end of the day is going to be gentle. I think there's going to be chaos. I do believe we will ultimately enter a stage where there will be chaos in the street, and that will be incited in all likelihood by hyperinflation.
Wiley Phipps asks, Rob, the Trump executive order on human rights abuses and trafficking, and that was December and a half ago, allows for the confiscation of assets. I hear he is going after the stolen gold held by Rothschild and other cabal members. Any comments or thoughts?
I would suggest that may very well be the case. Isn't it interesting that Trump initiated that executive order, and now we see the issues regarding Epstein making front page news? You know, you would almost think that Trump knew this was coming with the passage of that executive order, and and he may very well have known that this was going to come, because he might very well be the architect of the current outing of Jeffrey Epstein. So let's just say I think this Epstein case has the ability to become a much bigger story than it even is today, and the fallout from it could be savage and very difficult for most people to get their heads around. Developing story, we got to wait and see.
Circling back to Deutsche Bank, Ian Cassie asks, will the demise of Deutsche Bank affect the derivative control of PMs?
Other than it likely drives people into precious metals, not so much. Frankly, I don't believe Deutsche Bank will be allowed to fail. I think Deutsche Bank will very likely be nationalized. Because I view Deutsche Bank as the German flag carrier for financial institutions, and I think the German government will very likely nationalize the institution and at least keep its namesake as an operating entity. That's what I think is going to come.
It's a well-chosen name in that case, Deutsche Bank. Okay, Matt N47 asks, what is the difference between the Exchange Stabilization Fund and the Plunge Protection Team? Is there any difference?
I'm going to say, yeah, there is a difference, except maybe not as big as some people might think. Absolutely, the Exchange Stabilization Fund. To begin with, the Exchange Stabilization Fund's activities are not made public, period. And I mean, for the most part, there's been denial that the Exchange Stabilization Fund is even engaged in our capital markets. No one talks about the activities of the Exchange Stabilization Fund in public. But their activity is so pervasive that there had to be, like, if you're not going to call it the Exchange Stabilization Fund, you had to have some sort of a name assigned to official interventions, which we've been getting on a very steady basis since the 1987 stock market crash. Because it was in the aftermath of the 87 stock market crash that the President's Working Group on Financial Markets, the proper name for the Plunge Protection Team, it was created under Reagan in the very late 1980s. And I would say a lot of the heavy lifting that's attributed to the Plunge Protection Team is actually the work of the Exchange Stabilization Fund. So from that standpoint, they may be sort of interchangeable names. But at the end of the day, I believe that the missing 21 trillion is, in my view, it's been siloed in the Exchange Stabilization Fund, which is part of the U.S. Treasury. And I don't think the Plunge Protection Team is, I would refer to that more of an advisory panel, or the group of commercial banks and banking entities that do the work, the interface between the public capital markets and the Exchange Stabilization Fund. So if you can think of the Plunge Protection Team, that would be basically the trading operations of the banks that do the enacting of the exchange stabilization fund's wishes. So the ESF is the policy making or action determining entity, and the people that execute the orders are the plunge protection team. So yeah, there's a difference, but they're closely related because one carries out the actions of the other.
Okay. This is an interesting one. Eddie Jones says, why would holders of gold want a gold standard established?
Well, a gold standard would mean that it would create an absolutely crushing demand for physical metal. So if you're holding gold, if there was an enormous new demand for physical metal, which a gold standard would create, the value of your gold would necessarily go up in value.
Would that demand be like official, like government in nature? The Treasury would have to be stockpiling gold at that point to cover the money, the currency supply, or something?
Well, it would create a lot of problems for the Treasury, because I don't believe the U.S. holds the gold they pretend to hold now. But it would absolutely create new demand for physical metal, and it would probably, now that's the kind of impetus that would probably topple the long-standing suppression through the derivatives markets, because physical gold would become so scarce that they wouldn't be able to keep the price artificially capped at the levels it is now. So, yeah, I mean, a gold standard is kryptonite to the suppressors of gold and the people that would have gold remaining at the levels it is today.
The Face Kissers 1 asks, Rob, since gold becoming a Tier 1 asset has set it apart from silver as a monetary metal, can we still expect silver to perform in step with gold, or are we now in unfamiliar territory?
In my view, we have in nature, and we have in, I guess, in financial parlance, there's a benchmark called the gold-silver ratio, and the gold-silver ratio is currently, at least in my view, at a ridiculous level. And nature tells us that for every ounce of gold that comes out of the Earth's crust, roughly 8 ounces of silver are mined. So nature would imply that the gold-silver ratio, or that gold should be worth roughly in my books, 8 to 10 times what silver is.
Right.
But we currently have silver at 16 and change, and we have gold at 1,435 or 40 or so today, and that's more like 88 to 1. So I wouldn't want to have the side of the trade where the gold silver ratio goes higher. I'd be more inclined to want to skew my purchases of precious metal towards silver than gold. Although I wouldn't say don't own one at the expense of the other, but I would say if you're in an accumulation mode, you might want to skew your purchases a little more heavily to silver than gold, because I just look at what nature tells us. Gold is more stockpiled on the planet relative to silver than at any time in history. There's more above ground gold stocks than there are above ground silver stocks in terms of absolute number of ounces. And then with nature's gold silver ratio being at a number more like 8 to 1, I very much like silver as an investment, and I think it's probably the most undervalued thing on the planet right now.
That's sentiment has been echoed definitely by others as well. We have a remember WWG1 WGA asks, during a currency reset, will the physical coins maintain value like dimes, quarters, and half dollars after 1964? Okay, they're talking about current fiat currency coins that are made of base metal. Will they be of any value, or will it be useless like the paper dollar? P.S.
Well, I mean,
P.S. We are so happy to see Rob doing so well. You are in our prayers. Okay.
Well, thanks for that. Thanks for the well wishes. A currency in coin form that has no precious metals content will be worth no more than the paper or the digital, currency when it crashes. Because I think most of our coinage today is basically zinc, and I don't see there being any big run on zinc anytime soon.
And you already answered this other question about the return to the natural gold-silver ratio. So I think that's pretty much most of the questions that we have time for today. You've given us quite a bit of your time, and just wondered if you had any final thoughts to leave with our viewers. We know they can find you online at kirbyanalytics.com. Any final thoughts?
Stay long precious metal, and if you aren't yet, you might want to think about owning some, because that is the trade at the end of the day where you got to be. While I think cryptos are going up, I don't know which ones are going to win the day. But I do believe the cryptos will be a much more important thing in 3 years than they are today, and but the precious metals still have some catching up to do. But like I say, in the interim, especially with the admission of Steve Mnuchin that Bitcoin is a currency, I do believe Bitcoin's going dramatically higher. But I also think in time, precious metals are going to go dramatically higher too.
When we visit the Henry Ford Museum in Dearborn, Michigan, there was a large display board which you can stand in front of and look at it, and it's covered with names. And the names are the names of automobile manufacturers, and most of them, the vast majority of them, are in a dark gray color, and only a handful here and there scattered around the board are in white that you can read clearly. And the legend that helps you interpret this display is explaining that these are the names of all of the automotive manufacturers that have been in existence in the history of the world, and the ones that are all covering the board in gray are ones that are no longer in business, and only the few that are remaining here and there in the white are the ones that are still in existence. And makes me think, when you just said about cryptocurrencies, it's like, yeah, so that principle is viable, but which ones are gonna win the day?
Yeah, and that's the big problem in my view. Probably the biggest problem in investing in a cryptocurrency. Like buying Bitcoin today is like trying to jump a missile. And, when a missile's flying by, trying to get on it and wrestle it to the ground is probably not advisable. You see, when you want to get onto one of these things is on the launch pad. And and then you got to figure out which one's going to fly and how far, and which one's going to blow up on the launch pad. So, and that's the dilemma about investing, at least in my view, about investing in cryptos. Like, to me, Bitcoin is a missile that's in the air and it's moving, and you really want to try and jump on that. I mean, I think it's going higher, and I think Steve Mnuchin believes it's going higher too. And when he says that's a currency, it almost de facto means it is going to go higher, but it might go lower first. So, and that's the dilemma, and that's why investment advisors have such a difficult time in recommending it, because you just you can't recommend things to people that have the proclivity or the likelihood that they could go down 15% before they go up 20%. And you see, it's inappropriate risk for most people. Okay, and so that remains a case. Whereas precious metals have been around forever, and precious metals have never gone to zero. But I believe that there are plenty, and I mean plenty, of cryptocurrencies that will go to zero. Mm-hmm. And that's why recommending them is very difficult.
We've been speaking with Rob Kirby, proprietary analyst and founder of KirbyAnalytics.com. Rob, as always, well appreciated by me and by our viewers. Thanks for joining us here on Reluctant Preppers.
Been my pleasure, Dunnigan.
Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.